Good morning and welcome to today's market briefing. Let's start with the overnight close on Wall Street. The Nasdaq finished at 26,269, up 0.62%. The S&P 500 gained 0.38% to close at 7,572. And the Dow Jones Industrial Average added 0.29%, ending at 52,658. So all three major indices posted modest gains yesterday. But here is where it gets interesting. The pre-market futures are already showing a clear divergence. Nasdaq futures are currently down 1.02%, signaling that tech and growth stocks could face significant selling pressure today. Meanwhile, S&P and Dow futures are edging slightly higher, pointing to a rotation out of tech and into blue-chip value names. Let's look at some key market sentiment indicators. The VIX, often called the fear gauge, fell 5.03% to 15.67. That tells us overall fear levels are low. But here is the critical part. The 10-year Treasury yield dropped 0.87% to 4.55%. At the same time, spot gold rose 0.79% to $4,065 an ounce. When bond yields fall and gold rises together, that is a classic signal that money is moving into safe haven assets. The dollar index DXY slipped 0.3% to 100.50, while the offshore yuan held steady near 6.7660. So our overall assessment for today's market is structural divergence with rising sentiment. The capital flow theme is very clear. Money is rotating out of overvalued tech and growth stocks and into defensive assets like gold and treasuries. Some of that money is also moving into undervalued value sectors. The A-share market in China confirms this perfectly. The Shanghai 50 index rose 0.39%, but the Chi-Next board, which is heavy on growth stocks, fell 1.21%. The CSI 300 was slightly lower. The divergence between large caps and small caps is very pronounced, and defensive preferences are clearly winning. Looking at the global session, Asian markets saw the A-share market under pressure all day, with the Chi-Next leading the decline. Money flowed out of growth sectors and into low-valuation blue chips. European markets, while we don't have exact data, likely traded in a mild range given the weaker dollar and lower bond yields. The key signal for the U.S. session is that the pre-market futures divergence suggests the risk-off sentiment from Asia and Europe may not have fully priced into the cash market yet. Today's U.S. Open will likely see profit-taking in tech stocks, while the Dow may find support. The most important inflection point today is the Nasdaq futures turning negative. The sentiment leaders are gold and the AI-related stocks that surged overnight, particularly in cybersecurity and optical modules. The laggard is clearly the Nasdaq futures. Yesterday we made a call that after the negative news was priced in, risk appetite would recover and the market would rally broadly. That call was only half right. The overnight U.S. gains did confirm the risk recovery part, but the broad rally did not continue. The A-share market's sharp divergence today shows that the market is repricing high-valuation growth stocks. The selling pressure comes from profit-taking on earlier gains, not from a liquidity crisis. Now let's get into the capital flow themes. The strongest direction today is AI infrastructure, including cybersecurity and optical modules. This theme has been strong for 2 consecutive days, so we can confirm it as a continuing trend. Safe haven gold is strong for 1 day, so we need to see if it can sustain. The weakest direction is the A-share Chi-Next board, which has underperformed the CSI 300 for 2 straight days. Growth stocks are facing valuation digestion pressure with no new catalysts to support upside. For tomorrow, we have 3 verifiable predictions. First, the Chi-Next board will continue to face downward pressure, with support at 3,750 points. Second, Nasdaq futures will remain under pressure during the Asian session, with the decline potentially expanding to 1 to 2%. Third, spot gold will maintain its strength, with a target of $4,100 an ounce. To summarize, current market conditions do not favor chasing growth stocks. Global markets are structurally diverging. U.S. tech stocks face correction pressure, while gold and treasuries can serve as effective hedging tools. If Nasdaq futures stabilize before 8 p.m. tonight, with the decline narrowing to within 0.5%, you can consider deploying small long positions or buying gold call options. But if Nasdaq futures continue to fall beyond 1.5% and the VIX quickly rises above 17, then all long strategies should be abandoned in favor of fool. Overall, the probability for tomorrow is 40% down, 30% up, and 30% flat. Please manage your positions carefully and stay defensive.